Hello, everyone. Welcome to the Accounting and Tax Podcast. My name is Nima, and today we're going to talk about challenges that the small business owners have regarding the taxes. So, the main reason that the small business owners challenging with tax is they do a lot. So, they are CEO, they are social media manager, they are HR, they need to survive, they do their own bookkeeping. At the end, they do their taxes. The last thing they do the taxes. So they don't have any time. First, they don't know the tax code. They're not accountant. So they try to do everything because first they need to survive and then make sure they cut on expenses. But sometimes not using the professional cost them more. But the main reason they are vulnerable toward taxes is because they do everything themselves. One of the biggest mistake or the thing that misunderstanding I hear from the business owner that they can do it themselves by using TurboTax or any other software. TurboTax is good if you get one W2s, two W2s, or just your employees, some investments, simple tax return. Yes, sure, use a TurboTax. But if you get more complicated, if you have a business, you want to maximize your deductions, just don't use TurboTax. Use professional because you may pay more for accounting fees, but look at it as an investment. You for sure you will save. You maximize your deduction and you can save on taxes. Just using your TurboTax to save some accounting fees is not going to save you overall. So I saw a lot of examples at how small business owners are challenging with taxes and then they have to pay a lot that they shouldn't in the first place. As they were saying that number one of your expenses that people forget is your income tax. Is your expense. So you need to reduce that expense like any other expense. I see a lot of interest and penalties for not just paying quarterly estimate payments. So if you're not paying estimate payments quarterly based on your income, you're going to get penalized at the end of the year. It's not you're not a W2 employees anymore that somebody withhold taxes for you. You have to pay those withholding during the year. So even you have an LLC owner, you have to pay payroll taxes. So if you're not aware of those taxes during the year, you're going to end up paying all of those interest and penalties, and it's going to be costly. So there are a lot of examples that business owner missed claiming the deduction, home office deductions, the mileage. They didn't reimburse for the use of personal expenses. You cannot deduct personal expenses, but you can deduct portion of your personal expenses that use your for business. And then I see a lot of examples that the business owners don't claim those deductions. So missing on deduction, missing on quarterly estimate payments, paying interest and penalties not because they're not in compliance is a lot of examples I see that the business owners suffering and they pay a lot of expenses or out of pocket that they shouldn't pay in the first place. So, how much would be interest and penalties? It really depends on the situation. Let's say in the first quarter of the year, you earned $100,000. First thing, you don't know what you will end up in the end of the year. So that's why one unknown factor. Let's say you earn $100,000 the first quarter, you end up to 500,000 income at the end of the year. So let's say you're in the tax bracket of 30%. 30%, you lost paying the estimate payments first quarter on 100,000 income on the tax bracket of 30%. So they calculate based on that. You earn 100,000 first quarter, your interest rate, your tax bracket is this much, and then your interest and penalty is going to be that much. So that's why there are a lot of factors that some of them are unknown, but it could be projected, it could be estimated. So use a professional. That's why you use a professional. So it's not a flat fee. I earn 100,000, so I'm going to expect to have an interest and penalty that's 2,500. It depends on a lot of factors, but if you follow the instructions, you can avoid a lot of those interest and penalties. For example, for IRS, as long as you pay under 10% of the last year taxes, you would be penalty proof. You have an income tax of 10,000 last year. As long as you pay 11,000 this year, you would be penalty proof. And then you can pay the difference later. Let's say first year you earned 100,000, the second year you earned $1 million. You can just pay 11,000 as the estimate payments to defer all the tax payments to the April of next year. So these are a lot of, and then at the same time, California or any other state doesn't follow the rules, or some states. So that's why there are a lot of factors. There are a lot of things that you need to know. And you wouldn't know because you're not an accountant, and you shouldn't because it's boring stuff. But your CPA knows about those. They can project. They can see your last year tax return. They can project your this year uh, income. They can see your state that if you need to pay same like a federal, as long as you pay 110% or not, or you need to pay based on the projection. For example, if you're in California, in the same example, first year you make 100,000, second year you made $1 million. For federal, yes, you can pay estimate payments just based on the last year, 11,000, pay the difference later. But for California, it's not the case. You have to pay 90% of your current estimated tax. So it's getting complicated when it gets to the interest and penalties. It's not something you want to deal with it. Just let your CPA deal with it to avoid all of those interest and penalties. As you said, it's a complicated situation. So if you need, you just call your CPA, ask them to help you. If they cannot help you, call me or email me at helpdesk@alamircpas.com. We are able to help you. It's the things that we are make sure you don't pay any estimated over, don't pay over than the amount that you supposed to, and then not paying under. So the new business owner, the first thing they think is surviving or just excited. There's a new venture. They're just growing their business. They're not thinking about accounting side of their job. They're just more focusing, or compliance side of their job. They're just more focusing on developing and then getting started, surviving, and making money. So, and it's all right. But then if your business is growing and your back office is not growing, you will have a lot of problems. You will be behind all of those tax compliance or any other compliance, like even city business licenses. So those are going to add up. So if your back office is not going to grow with your business, it's going to catch up, and then the catch up is going to be costly. So make sure you have a good system in place from the beginning. At least when you see the growth, you see the money is coming, that's the time you need to start. Okay, I need to have a good system, bookkeeping, compliance, everything needs to be in checked. Otherwise, it's going to catch up. My 15 years of experience of accounting, the number one mistake I see from the small business owners is they start thinking about accounting when it's late. When they have to comply with the 4 years of compliance issues, then they have to pay interest, penalties. They have to clean up their books. They need to catch up with the deductions that they didn't claim before. So the number one mistake is thinking about accounting when it's too late. One of the red flag that may get audited is like mixing your personal and business expenses. And then on the other side, one of the other problems that some business owners forget to claim some of those personal expenses that can be allocated to your business expenses. So that's the area you really need help. You need to have a proper documentation, how to claim your personal expenses that could be allocated to your business. As long as you have that documentation, your penalty proof, your IRS audit proof, and then at the same time you can claim your claim and maximize your deductions. So the business owners shouldn't wait till the year ends and look at their financial. They should look at the financial every month. If there is a significant growth, they need to communicate with their CPAs, because the CPAs needs to know where you are this year. I know they can do the penalty proof, but they can project what you need to do for the next year, or even like for a state compliance, you still need to make those estimated payments during the year. So you need to review your financial every month, at least quarterly. You need to know where you are. You need to know how much your estimated tax would be for next year. You shouldn't be surprised. You shouldn't wait till April of next year and guess how much you owe for taxes. You need to have that number somehow close. So if you don't, you need to consult with your CPA. Your CPA be in touch, give the correct information. If they don't do your bookkeeping, always be in touch, provide their books, provide them any change in your business, and communicate with your CPA in a regular basis so they can help you to project your income and taxes for the this year. So it's too late if you wait to the end of the year. It's like again getting ready for your exam after you already failed. So having a good CPA like me is great, but it's not solve your problem. It's like having a great doctor. But if you don't exercise, if you don't do diet, if you don't at least take the prescription that your doctor gave you, nothing's gonna happen. Just having a good doctor in place is not gonna happen. Having a good personal trainer, if you don't do the workouts, it's not gonna help you. If you don't follow the diet, it's the same with the accounting. If you have the best accountant like me in place, it's great. But you are the person you need to do follow the steps. You are the one that can go set up your retirement account. You are the one you need to set up your accountable plan for reimbursement. So the number one person responsible for your business is you. If you communicate more with your CPAs, that's the best option. But at the end of the day, you're responsible and you're the best person to judge your business. Number one advice about small business owners: don't think about accounting when it's late. Think about accounting as an investment in your business. Proper accounting, proper planning, proper financial statements helps you first get understanding of where you are at your business, and the second, you can plan for all the tax liabilities, any surprises, any plan for the next year, cash flow. So have a proper accounting before it's going to be late. It's going to be more costly to think about accounting later because first you need to pay somebody to clean up your books, pay all of those bills for deduction that you could have claimed but you didn't, and comply with all of the issues that you didn't address on time. So let's say it's gonna be late and you haven't have a proper accounting system for several years. First thing, you need to have a proper in-house accountant. If your company is complicated and it needs a lot of work, you need to have in-house accountant, or use a third-party CPA as a full-time, like fractional CFO work, so they help you with the accounting. So first thing first, you need to put your accounting in place, clean up your books, somebody professional clean up your books if you have in-house accountant or third-party outside CPA. And then for proper documentation, there are a lot of softwares, there are a lot of new ways these days. As long as you have a proper bookkeeping software and then the proper software for documentation, you should be in a good place. Earlier is better, but if it's late, don't worry about it. You can always go back and clean up. Thank you so much for listening to this podcast. Today we talk about the struggles that the small business owners have with taxes or in accounting. If you have any questions, reach out at helpdesk@alamircpas.com. Again, if you have any problem with estimate taxes, projection, or tax liabilities or tax planning, we are here to help.